Hey everyone, welcome to Shorts and Checks podcast. My name is Alvaro with the Bilingual Stock Market channel, and over here I am today with my good friend Dan Foyani. What's up, bro? How are you?
Good to be here today, my friend. Another good melt-up day in the market. Not much to do, but you know.
Yeah. It's been a it's been a tough week trading wise. So this is going to be the first episode of this podcast. Again, Shorts and Checks, and I met Dan under very special circumstances. We can say it, right? So
yeah, of course.
We met each other at the New York Stock Exchange. It was like a month ago, I think, 2 or 3 weeks ago. So both of us attended a CNBC meeting at the New York Stock Exchange, and we had some sort of hangout with the knives and Tumbly and stuff like that. And I was your cameraman because I took some pictures with you and the knives, and you did the same.
Hey, you have to pay it forward. Pay it forward.
Yeah, there you go. Correct. So we met each other a month ago, and now Dan is in our Discord chat, and he's helping the members of my Patreon in English. And we decided to start a podcast. So for the most part, guys, join us. We are going to be discussing, debating, and going over your favorite stocks from a technical standpoint, fundamental standpoint, and also financial standpoint. So do you want to tell the audience about yourself, Dan?
Yeah, sure. So I really started doing the financial plan, or portfolio management's a better term for it, about 5 years ago, right when the pandemic happened. I ended up leaving my job as an investment banker. Well, leaving, that's a good term for it, right as the pandemic was becoming a thing. I spent some time trying to figure out what I wanted my next chapter to be, and eventually found my way into managing a portfolio of primarily my family's assets, but also some close family friends. So I'm in the process of creating a family office. I've been managing this portfolio and trading full time for about 5 years. I've seen a lot in that time. Obviously, not as much as someone with 10 years experience, but
these last 5 years have been very entertaining, to say the least.
Yeah, without a doubt. I mean, you had a pandemic. You had the most aggressive tightening cycle from the Fed since the 1980s in the Volcker era.
We had a brutal bear market in 2022. It was brutal.
A brutal bear market in 2022.
Yeah, correct. And
followed by
3 months ago, we had a super, quick drop.
Flash bear market.
Flash crash, correct. A flash bear market, correct. So,
it was done in a blink. You had about 5 minutes to buy the S&P at 18 times earnings.
I think that the recovery that we saw from the April low to this date has been like the fastest recovery ever for the markets or something like that. It's crazy.
Yeah, makes sense.
It's been crazy.
Yeah, it would make sense.
Yeah.
But just to close up the introduction, about 2.5 years ago, I started writing about the markets weekly. You can find my work at GorillaWglasses.com. And as Alvaro said earlier, I do frequent the Discord. If you ask for @Gorilla with glasses, I'm around typically most of the time when the market's open. You'll probably get an answer from me.
Awesome. There you go. And let me see if you guys can see this, because now I am supposedly sharing my screen. Let me double check on that. There you go. So take a look. So that's me with the knives. And guess who was the cameraman? My friend Dan. And take a look at this picture.
It's a great picture.
Take a look at that outfit, bro. It's insane, right? I mean, Dan Ives is...
I had to dress up for Dan Ives, and it looks like he dressed up for me. So very happy with that picture.
So this was the moment in which we met each other. And well, now we are doing this podcast. And today we will be reviewing Ionq, Nvidia, Robinhood markets, and Palantir. So let me get here back on Zoom. So I guess that we are kicking off the podcast with Ionq. Is it right? Yeah.
Yeah, so, that would be perfect.
Do you want to go over? If you want to share your screen, please.
Sure. Right now I will share.
Go ahead, so I can make sure that
I'm going to share the chart. But before we...
Okay, go ahead.
And I'm going to share the chart. But before we actually talk about, what's going on here, I want to give everyone a really brief understanding of what quantum computing is, just so you understand how this differentiates itself from something like a Rigetti or an IBM or a Google. So Right now, we're all working with computers that are working with bits, ones and zeros, call it classic computing. Quantum computing works a little bit differently. It works with qubits, which can be zeros, ones, or pretty much anything in between. Now, we're not going to get into that. If you want to learn more about that, ask Google or your favorite chat GPT bot about the concepts of superpositioning and entangling. But the benefit of being able to compute beyond just zeros and ones is that for certain complex issues, such as simulating molecules, which could help us better understand and cure diseases, cracking encryptions, which could be used to literally mine all of Bitcoin in an afternoon, or optimizing massive systems like the ones they have at the Treasury or the Fed that are completely outdated, these quantum computers will be able to do that, whereas a classic computer could literally take hundreds of years to do it. So the benefit of quantum computing is that we're basically going to be able to unlock a level of problem solving that is not available to us through our classical computing. Okay. Does that make sense, Alvaro?
Yeah. When you say like classical computing, that's for the most part the computers that we are using nowadays, right? Like all of them.
That is what we're using right now.
Even the most advanced ones, right?
Yes. Even AI right now is running on ones and zeros, running on bits.
Gotcha.
It's not running on, and quantum works with, they're called qubits.
Okay.
And that's the difference. So now that we have that basic understanding, there are two primary methods by which you get there. One is the one I think people are most familiar with, which is superconducting circuits. So you basically take these superconductors, which are a little bit different from semis, but bear with me, you cool them to absolute zero, which is colder than the vacuum of space.
Oh my God.
And by doing that, you create a qubit, which you can then use for processing and storing information. This model is extremely scalable, but if you're unable to keep temperatures near absolute zero, the accuracy of your compute, the quality of the qubits that you are generating diminishes. So while it's extremely scalable, it's maybe not the most efficient it's not the most accurate. Okay? The people doing that are Rigetti, Google, and IBM. I believe IBM is doing that as well.
So
yeah.
Rigetti, Google, and IBM, right?
Yeah, so the Google chip is called Willow, and Rigetti's entire business is based on the concept of superconducting circuits.
So you would say that the business model of most of these quantum computing stocks is legit? Like Ionq, Rigetti. Some people are suspicious about it, right? Because I mean that this technology is like coming over. Like I don't know. Some people say 5, 10, 15 years. So you believe that these companies are legit, right? Like
I believe that some of them can certainly be legit. But here's the thing: the difference with Ionq is that Ionq is taking a different approach, the only other approach we know of, which is called trapped ion. So what they're doing at Ionq is they're taking individual atoms, ions in these atoms, and they're trapping them in an electromagnetic field. That's how they're getting the qubits.
Wow.
So the disadvantage of this is that it is not very scalable. You're literally building your quantum computer one atom at a time. Wow. But the benefit is that the qubits you're getting are of an extremely high quality. So while you might not be able to scale as quickly, your accuracy is a lot more ensured.
Wow.
Let's think about it this way. Before we move on, let's think about it this way. I think this is a helpful analogy. Imagine that superconducting...
Hey, Dan, let's do something. Can you please stop sharing your screen? Because I need your screen to be larger. There you go.
Yeah.
Before we go over the chart. Okay, go ahead. Keep going.
Sure, no, perfect. I think this is a really good way of contextualizing the difference between the two. So think of what Rigetti and Google Willow with superconducting circuits is kind of like a smartwatch. They're flashy, they're fast, they're mass produced. They want to get them out there and get them to the people. Now, trapped ion, which is what Ionq is doing, is more like a Rolex. It's a Swiss mechanical watch that is being made with the utmost precision and is meant to last you a lifetime. So the bet that Ionq is making by going down this route is that over time, accuracy is going to win over speed.
Wow.
And they are the only publicly traded company right now, the only pure play publicly traded company going down this route.
The only one. No one else is doing this.
The only other potential publicly traded competition, or sorry, that could become publicly traded is actually from Honeywell. They have a quantum division. I think they're called Quantinium. But I don't think they plan on spinning them out even as a part of their current business simplification.
Do you mean Honeywell, the industrial company?
Yeah, so Honeywell is splitting into 3 separate companies, and when they do that, they're still not planning to spin off Quantinium. So there still won't be, even after they split, I think in 2026 into the 3 companies, Ionq will still be the only pure play in trapped ion.
Gotcha. I mean, I'm surprised that Honeywell is working on this. I'm surprised. They are my neighbor here from, they are headquartered here in Charlotte, in North Carolina.
Actually, I didn't know that. That's interesting.
Yeah. Their building, their headquarters is like, I don't know, 10 minutes away from my place. So Ionq, among all the quantum stocks, is a very special one, I guess, because of the technology that you're talking about, which they are the only ones that have that particular technology, right?
Yes. And you're going to talk about the financials shortly, and then we can look at the chart, obviously. But I think what's important about Ionq is to see the whole picture. And what they're positioning to do is become the Nvidia of quantum. And what I mean by that is they already have the cult-like leader at the CEO. Unfortunately, I'm blanking on his name, but he is well known in that circle for obvious reasons. But he's building relationships the same way that Jensen did. Like right now, Ionq has secured partnerships with AWS, Azure, Google Cloud. They're providing both the software and the hardware. They're making themselves sticky. They're making themselves really, really hard to replace. They have contracts with the U.S. Air Force, the DoD. They have a strategic partnership with General Dynamics and General Dynamics is a traditional defense company, to basically create quantum solutions to help across or to assist in the contracts that General Dynamics has with the U.S. government and those federal
recording
agencies.
In progress.
Sorry.
No worries. And most recently, maybe not most recently, but I think interestingly, Korea's Institute of Science and Technology, they recently tapped them to make an 100 qubit quantum computer to support national research and cloud services. So they're becoming
I saw that they were kind of coordinating up with Korea. So that's what it is about. And that will probably end up being some sort of source of revenue for the company or extra revenue.
Yes, and I guess my point is this is a $12 billion company or market cap company. So it's very small relative to like the names in AI and the names that we're accustomed to talking about. So understand this is risky. It's a $12 billion market cap. But they're positioning themselves to be the leader in a space that we don't really even know how big it could get. But they're becoming the go-to partner on quantum for massive corporations and governments.
Wow. So this could end up being some sort of Palantir or Nvidia maybe later on down the road.
It's a lot. So I love the comparison to Palantir. I like the comparison to Nvidia. But what this actually reminds me of is a company called Constellation Energy. They are probably the most well-known nuclear or play on pure nuclear reactors in the United States. There was when they were like $80 a share, a headline broke. They're at 320 or something now, by the way. A headline broke talking about how they had I can't remember which type of nuclear reactor it was, but it was a huge break. They're the only ones to do it, and the market kind of yawned. Eventually, the market caught up and realized that nuclear energy was going to be necessary to power AI. I think that if you kind of get to the point where people realize that Ionq is taking quantum in a different direction that is perhaps more achievable than what we were led to believe with Google and Rigetti's approach, that you can get some real ownership of this stock, like long term from institutions.
A market cap of $12 billion is not pricing in the potential growth that you're telling me. Right? So
correct.
Yeah, that could be taking place in the future. So correct. Yeah. I mean, it is a small cap stock. So yeah, I didn't know that it has $12 billion of market cap, but wow. So I mean, if everything plays out as you think it could, yeah, I mean that market cap could grow significantly. So yeah, awesome, perfect. Do you want to go over the technical chart?
Yeah, sure. Okay. Why not? I wish I could provide a little bit more.
So I mean, if someone wants to I don't know, start a short-term trade on Ionq, what would you be advising here? There you go.
Yeah, so right here I have a 1-year chart, daily candles. I have the, hold on, I just need to get this out of my way. I have the 50-day and the 200-day. You can kind of ignore that. It's not super important for this. What we need to be looking at here is what I anticipate is resistance at the $49 level.
That's a good looking chart, that. It's in an uptrend.
It's a fantastic looking chart.
Yeah, it's a very good looking chart.
The important thing to look at is MACD and RSI. MACD is in this kind of middle pane here. You just kind of had the bullish crossover, which, last time it did that, it was down at $22 a share. So it turned out to be a pretty good buy signal. And now you have RSI marching its way towards 70, which, kind of starts feeling like the range where you're attracting momentum buyers. I would say if you wanted to do a short-term trade on this, you could wait until the stock hit 49 and then initiate whatever trade you want, anticipating a breakout to a new all-time high. That's how I would play it.
It looks like it is about to break out to the upside. It is a very good looking chart there. Yeah, sure.
Yeah, you could play it two ways. The first way, as I outlined, wait till it breaks 49, or you can wait for it to retest.
Yeah, what's the all-time high at? 54, I think, right? Something like that?
This is the all-time high, this big candlestick here. But I think if you get above 49, especially because it tried to do that, it looks like at the end of May, the beginning of June. If you get past this block, I feel like you are all systems go.
All right, awesome. Let's go over the financials of the company and the valuation. So let me share my screen. There I am. Okay, hold. So let me make sure that, okay, so we are talking about, as you just pointed out, this is a $12 billion market cap stock. It is a small cap, no P ratio, so this company hasn't made any profit yet. No forward P ratio, so no one is expecting Ionq to make a profit at least within the next 12 months. And we have a price to sales of 230. So this company has a market cap of $11.9 billion that equals 230 times trailing 12-month revenue. So it is the only valuation metric that we can talk about would be the price to sales, which is 230. It is an expensive stock. If we take a look at the financials of the company, so yeah, let me take a look at revenue growth. So we have 3 quarters in a row with revenue going down. So I guess that this company doesn't have a reliable source of revenue yet, right?
They have a handful of contracts.
Okay, but just that. I mean, and I guess that the partnership with Korea, that is still coming, right? So they are not making.
It's still baking. The company reported last May, and it actually responded favorably, and it's because they narrowed their losses in the quarter.
Yeah, let me take a look at that. So the net income, they lost $32 million, down from $202 million.
Yeah, so it was reacting to the idea that it looked like there's a path to profitability, so to speak.
So yeah, and so let me go ahead and take a look at the free cash flow of Ionq, because usually when a company is burning money, the first metric that turns positive before a company becomes a profitable company is the free cash flow. So let me see. Free cash flow has been improving from minus $79 million down to $36 million of negative free cash flow. The company has a very healthy financial situation. They have $588 million in cash and no debt. That's good. And obviously they are diluting, not in a very aggressive way, but they are diluting, but that's okay. So, they have a very healthy financial situation when it comes to cash and debt. The company is burning. It lost 32 millions on the last quarter, and they have 588 million in cash. So they still have plenty of money to be around until they can make a profit, I guess. So yeah. The financial situation of the company is very healthy. Yeah, go ahead, bro.
I would just say that if you are someone that would be turned off by and don't get me wrong, this is the point you're making about the financials 100% correct.
Yeah.
It's just, in my opinion, this is what you would expect of a young emerging growth company. We're early.
Yeah, sure.
Like this is if you're investing, excuse me, if you're investing now, you're more or less investing in the narrative. But if you're trading, you shouldn't really care about the financials anyway. You should just be trading the chart. I feel as though if you believe in the quantum thing and you believe that trapped ion is going to work, or it's going to attract more buyers, this is kind of your only option. The valuation metrics you mentioned of like 230 times price to sale, like, yeah, that's scary as all hell.
Yeah.
But it just goes to show you that's kind of where we are in this next phase of the industrial revolution, the tech cycle. Valuation just doesn't matter as much. Investors are willing to pay literally anything.
Yeah, especially if interest rates go lower. Let me ask you something.
Right.
Can we say that when it comes to quantum computing, is 2025 what 2018 or 2019 was for artificial intelligence stocks?
That's interesting.
That's a tough question, I know, but I don't know.
No. Here's how I view it.
Okay.
I think that here's my take on emerging technologies. They don't get appreciated and therefore re-rated until they have their iPhone moment or their Chat GPT moment.
Correct.
So,
Correct.
in my opinion, you don't need to buy this thing. You don't even need to trade this thing until we have it. I think it's worth noting that I think it was maybe 6 or 7 months ago, Jensen Huang mentioned that quantum computing is like 15 years away, and all those stocks dropped.
And then he took that back.
Yes,
He
exactly.
took it back. Yeah. Because
100%.
all of these stocks got killed. So yeah, he took it back. Correct.
He took it back, but I think maybe he also just kind of looked back and he's like, oh no, they are making progress. And I mean, if you go from, oh, it's 20 years, 15 years away, oh, it's 5 years away, who knows? I'm not sure exactly what the killer application will be, or what their Chat GPT or iPhone moment will be, but when it's here, you're not going to have a choice to get in. And Ionq, Rigetti are really the two only pure plays in quantum overall. I'm sure there are others. I think I saw something like D-Wave or whatever, but Rigetti and Ionq have the most notoriety. They're definitely first of mind. So they'll benefit the most when the narrative shifts and you get that Chat GPT moment for quantum, whatever it is, but it's impossible to time.
Gotcha. So let me go to my screen again. Hold. Mm-hmm. And let me go over the forecast of the analysts. So we have seven analysts covering Ionq, $55, $45, and $30. This is the 12-month forecast. And if we take a look at the revenue growth forecast, it's impressive, bro.
Yes.
So for 2026, 96% revenue growth, 2027, 70%, 2028, 76%, and 2029, 50%. Mm-hmm. So, I mean, most of the analysts that are in charge of Ionq as of now, or that are covering the stock, believe that the revenue growth is going to be exponential, at least, 4 or 5 years out. And if this company, in my opinion, and of course, if we take a look again at the price to sales, 230, it is very high. It is a very high multiple, and this is the only valuation metric that we can use as of now. This is a very expensive valuation metric, but if this company keeps or is able to grow revenue at this pace until 2029, and you keep getting like good news and like the one that you just pointed out about South Korea, I guess. Mm-hmm. Who knows?
It was not North Korea.
No, South Korea, of course. Yeah. When we say when we say Korea, we're talking about South Korea.
We're talking about South Korea.
Correct.
Yeah.
And of course, I gotta ask this: is quantum computing the next artificial intelligence?
That's a great question. I haven't really thought about it in that light. I view them as two separate things. Mm-hmm. But it would certainly be. So here's how disruptive it would be. Mm-hmm. Everyone that's mining Bitcoin right now would be out of business. Anyone that's
Why is
anyone
it?
that's using
Why is it? Do you think that this technology can break the Bitcoin blockchain?
so quantum computing, again, not that we as a species have a full understanding of it, but one of the potential outcomes of a full quantum computer is that it is so powerful that it could mine the rest of Bitcoin in like a weekend.
Wow.
So
And we're
the
talking,
idea,
we're talking about the year 2140, I think. When
is that what they're projected right now?
something like that, yeah, 2001.
Yeah, no, throw that. If we wake up tomorrow with a fully fledged working quantum computer, whatever that even looks like, I'll be honest, I'm not sure what it does. But if you actualize, if you figure out quantum mechanics and you can put it into a computer, there is no problem too big.
Wow.
So thinking about
Including the Bitcoin blockchain.
yeah, I mean that's why this is such a that is why this is such a promising technology. So
Wow.
let's just step away from Bitcoin for a moment.
So this would be a bear
But
case for Bitcoin, right? If the blockchain
you know,
can be.
I think it technically would be because you'd be.
I mean,
putting a
that would
whole
be
bunch of
that
supply.
would be a matter for another episode, right? But
Right. But
Yeah.
I think let's just step away from Bitcoin. Like that was just something to say because people love to hear about that stuff.
yeah.
But the real application is that in the United States government, our treasury has a crazy system that's outdated and there is a lot of data to go through. It would take a classic computer probably a lifetime, like a couple hundred years to go through and fix everything. Like there's a lot of data. It's impossible to peel through.
Yeah.
The Federal Reserve has a massive data set. It takes computers a long time to go through these things. If you have a quantum computer, you can optimize, you actually have a way to optimize these massive systems that have kind of gone in a suboptimal direction with this with respect to how they've been managed and sorted.
Gotcha. So this is the next level of computing.
Yeah, it would.
That's it.
It's
In
it's
other
hard.
words, yeah.
Yes.
In other
Well,
words,
yeah.
I mean,
Everyone. Yeah.
from a financial standpoint, the company is. It has enough money to keep burning money for quite some time, I guess. And we'll see. I mean, if this thing, or if Wall Street believes that that quantum computing is going to be the next big thing, this company is going to be
It's going
attracting.
to explode.
It is going to be attracting a lot of investors.
No,
into it, yeah, for
if
sure.
Ionq can convince someone like BlackRock or any of the big institutions to buy this stock, this is a $12 billion market cap.
Yeah, this is nothing.
It will not. It's nothing. It'll move overnight. Yeah.
Yeah, Google could buy this company
Yes.
in a blink
they
of an
could.
eye. So this is
They
a
could.
potential candidate, to be acquired by Google. There you go.
This
So,
is definitely candy for companies like that.
yeah,
For sure.
I mean, that's chuck change for Google, $12 billion. So okay, so we're done with Ionq. Let's go over to Nvidia, bro.
Cool.
So, do you want to go over the technical chart? Do you want to tell us about? So Nvidia's trading at all-time highs, Dan. And since it is trading at all-time highs, do you see more upside here in the short term? Do you think that Nvidia? Oh, by the way, Kramer said last night that Nvidia is headed to $5 trillion.
Of course. Why not?
Yeah, he said that. So okay, that could be good news or bad news for Nvidia. We'll see about that. So you guys,
Yeah, like I think last time it hit, it's like when it hit 3 trillion, I think it kind of treaded ground for a month or two, maybe even lost a little bit of that market cap. So, it makes sense to consolidate, but we should note that the percentage distance from 3 to 4 trillion is wider than from that to 4 to 5.
Correct. So, are there any competitors to Nvidia as of now? Serious competitors?
That's a fantastic question.
Because that's the bear case. So the bear case is AMD is a competitor. Amazon is going to be building their own chips. And Meta is going to be building their own chips. And I don't know. And Google will be manufacturing their own chips and so forth. So that's a bear case. Like the top of the demand is just around the corner. And the bears have been saying that for the last 2 years. And they have been wrong and wrong and wrong and wrong and wrong. So,
Right.
Okay. So what do you think about it?
I actually agree with you. I don't want to go as far as to say that Nvidia has like no competitors. It's it's flat. It's a flashy statement, but I think there is some truth to it. It's not that there aren't other companies making chips that are competitive. It's that we're at the point where you have had these mega cap companies and sovereigns that have written checks to the tunes of billions of dollars and invested the last 2 years of their human capital in basically building an AI infrastructure on Nvidia hardware and Nvidia software. Like, if you wanted to wake up tomorrow and take all of your Nvidia infrastructure and transition it to AMD for whatever reason, you would sink all of those costs. You would have to incur a whole bunch more time into making that switch. And this is an AI race. No one has time to do that. That's how I feel about it.
Correct. It is a race against time. And I think, and I am not a tech-oriented person, but I feel that all of these, big tech companies, they feel that if they don't invest in a very aggressive way, they will lose the AI race, right? So they are like paranoid, right, at this point.
So I'm actually happy you brought that up. That is a fantastic segue into everything that Meta's done over the past month.
Yeah.
I mean, they poached the guy from Apple, the number one AI guy from Apple. They spent, I think, $14 billion to buy a 49% stake, or maybe it was 51% stake in Scale AI. They're buying and poaching talent left and right to try to get ahead of this AI.
I heard that they're paying like $100 million to hire AI engineers. It's crazy, man.
I have no idea if those are like the true numbers or that's like the whole length of, but to your point, does it really matter? Like Zuckerberg is making calls and not taking no for an answer.
Correct.
But the reason that this is important and how it applies to Nvidia is that, it's the one place no one has left. There is a moat here with Nvidia that doesn't get talked about enough, and that is the talent moat. If you're a top level guy in Nvidia right now, you're working under the leadership of the godfather of the AI, of AI, Jensen Huang, and he's created an amazing culture there. We don't hear about the poor work culture at Nvidia. If you care, you're basically working at a place who's at the center of the next phase of the Industrial Revolution, and you are at the center of every major media story that covers your industry.
Did you hear Tom Lee? Go ahead. Tom Lee said exactly that at the CNBC event. That the working environment at Nvidia is like the best one. That's the best you can get, and that they have the best engineers, they have the best talent working 24/7 to design these artificial intelligence chips. So it looks like there are no competitors inside, right? So.
Yeah, and I mean, if you think about it too, and I think this is actually might be, not that it's the most important thing, but it's something that shouldn't be discounted. If you're like C-level or high level in Nvidia, your compensation is likely largely attached to the stock. Mm-hmm. You're not leaving this stock. What you want to go? What other company has a stock better to compensate you more for your time? Like basically, if you care, if you're a fanatic about your industry, you live and breathe it. You're working for the person that is literally at the forefront of the technology. If you're financially motivated, you literally can't do better if you're being compensated in stock.
Correct.
There's no reason to leave Nvidia. And if you have a monopoly on the brain power that's pushing this, you're not going to lose.
Yeah. I mean, that's a big factor, and the stock is trading as of now at all-time highs. We have the earnings report coming, I don't know, what is it, like 2 months or something like that? So,
they're late.
Yeah, correct. Yeah, they are the last Magnificent Seven stock to report usually. So, do you think that the $5 trillion is possible? I mean, I don't know, in the short term, yeah? Yeah,
well, in the short term, I mean, another $1 trillion in
2025? No, 2025. Who knows?
That's tough. Like, I feel like if Nvidia gets to 5 trillion by the end of this year, the S&P needs to be at like what, 6,700 or 6,700?
7,000 points, something like that. Yeah.
I mean, that's a lot of movement. Okay. I won't say it isn't possible because we're definitely in we're in a very frothy environment. The appetite for stocks is high.
Correct. Yeah, we are. frothy.
Of course, as we say that, I'm sure a week after we release this, we're going to be in the midst of a 5% correction. But,
you never know. Yeah.
For now, it sounds brilliant.
Correct. So pullbacks on Nvidia are buying opportunities for the most part. I don't know if you want to go to over the technical chart of Nvidia.
I mean, my guy, it's a bull market. Pullbacks are the opportunity.
There you go. Yeah.
You buy in a bull market,
especially in good companies. Yeah. If you want.
Let me just pull up this. I'm trying to pull up the chart I would use because unfortunately this thing is so far away from any of its major moving averages. You kind of just got to eyeball the chart.
But okay, say that we have a pullback. Where would you be a buyer of Nvidia? Would you buy it here at all-time highs?
I have plenty of Nvidia. I would not buy it at this moment.
Okay.
Especially because. Oh, do you mind if I share my screen?
Yeah. Go ahead, buddy. I'm waiting for you. Yeah, sure. Go ahead and share your screen, and then we'll go over Hood. Yeah. Okay. Mm-hmm.
Sure. So
there you go.
Perfect.
Let me make sure.
This is a 1-year chart of Nvidia. Again, the candlesticks. I got the 50 and the 200 day. Mm-hmm. I would expect there to be some support around 153. It double topped there as 2024 became 2025, and it revisited there just last week, and there were buyers waiting. So if we get a pullback to 153, I'd load some up. I mean, ideally, the way I invest, I'm never going to top tick and I'm never going to bottom tick. I will wait for this to retest 153, and once it goes back to 160 after it retests 153, I'll buy and I'll hold it.
It's a technical chart that is under the undisputable control of buyers. And at this point, if I ask you, what do you see first, or what do you see happening first, 200 or 120?
Oh, that's tough because you'd have to blow through 153. 120 is like all the way down here, like coming out of the tariff lows. Mm-hmm. I would say 200 first. Okay.
Yeah, I mean, the chart says so. I mean, I guess that it is a very good looking chart as of now. Above all the moving averages, higher highs, higher lows, clear uptrend. Yeah, under the total control of buyers. Yep, it looks like we have higher prices coming up. Hey, by the way, I forgot to ask you, what about DeepSeek? Is it a risk for Nvidia?
I'm going to be honest. I'm not as knowledgeable on DeepSeek as all of the experts that have already said what they've said about DeepSeek. I tend to think that it isn't a threat to Nvidia because what Nvidia is doing is pushing the cutting edge, and what DeepSeek did was that they more or less replicated something we knew how to do with lesser technology, and I think that's kind of to be expected. Like basically, Nvidia innovated. And they're like, all right, let's just try to figure out how we do this ChatGPT thing, how we do this benchmark test. A bunch of months passed, and then another company in China that was forced to work with materials that weren't as good as the latest and greatest found a way to meet the benchmark with lesser chips. I think that's kind of what you would expect. You would expect people to, once you have time with the technology, to make better use of it.
Gotcha. But but we're still talking about a company that needs Nvidia chips in order to work on artificial intelligence. So
okay, sure.
So we're back at the same point. Like, okay, they are still using Nvidia chips. So because at the end of the day, they are designing artificial intelligence chips. So that's it.
Right. I guess the threat that people were worried about was that if you could create something that reaches benchmarks with lesser chips, then what is the need to buy the latest and greatest?
Okay, but wouldn't that make the access to artificial intelligence from a business standpoint like easier? So say that many more companies can develop artificial intelligence. They will probably end up using Nvidia chips, right? So I never saw the bird case about DeepSeek. And I am not a tech expert, of course, but I think that at the end of the day, they are manufacturing or they are designing the best chips. So
no, you are 100% correct. I think where we are today, which might explain why Nvidia is at an all-time high. DeepSeek showed us that you don't need to be a multi-billion dollar market cap or $1 trillion market cap to do AI.
Correct.
And that's beneficial for the 493, the 2000 in the Russell, whatever other index you want to look at. The reason I think we're at all-time highs is because they realize that maybe they'll be able to sell some chips to those companies, but also we recently heard that they might be Nvidia might be a couple weeks away from striking some sort of deal with the US government and the Chinese government to again sell modified chips into the Chinese market.
Okay, correct. Because as of now, Nvidia has a specific chip that they are selling to China, right? Which is not very advanced. So is the H100 or something like that? That is like specifically designed for the Chinese
There was
market?
a specific China chip.
Correct.
That the Trump administration actually said they could no longer sell. So for a while they weren't sending anything into China, and that's what caused, if I remember correctly, and that's what caused that big write down last quarter.
Correct. Exactly.
But the reason that it didn't kill them is because they actually found ways to use parts of those chips and recycle them.
Correct.
So this company is basically in that moment, they took chicken shit and made it into chicken salad. So not great, but better than what it was.
So can we say that it's a race and the only runner is Nvidia as of now?
In selling GPUs?
Correct.
I would say the only other company you need to contend with is Broadcom.
All right. And Broadcom does other stuff as well. So when it comes to artificial intelligence. So, okay.
Yes.
Okay. So let me go ahead and take a look at the valuation of Nvidia and the financial execution. And I mean, I've gone over Nvidia on multiple occasions. By the way, Dan, let me tell you this. So when the last report came out, the last earnings report came out, I am usually trading earnings reports, and the report came out and stuff, and some people were complaining about the report, and I was telling them, and let me see if I don't know if I have you here. No, you're not there, but hold, because I'm still dealing with, okay, no, I'm here. Yeah, I would like to have you here. Okay, let me see. So, okay. So when the report came out, a lot of people were complaining about their report, and I said, guys, the most important thing here, the most important aspect of the report is the guidance on gross margin. This is important because Nvidia up-guided on gross margin. That implies that Nvidia is implying that there is no top for the demand for their chips in sight. They up-guided on gross margin. So that was very positive. Nvidia was trading at $140 when the report came out, and now, I mean, the rest is history. Nvidia is trading at $164. So $3.97 trillion of market cap. We have a P ratio of 52. So Nvidia is trading as of now at 12 times trailing 12-month earnings, which is it is a high multiple. We have a forward P ratio of 38. Nvidia trades at 38 times next 12 months earnings. Not a cheap, forward P ratio by any stretch of the imagination. And we have a price to sales of 27. So for the most part, anyone that is buying Nvidia at $164 as of now is paying $27 per every single dollar of revenue that Nvidia is making. So this is not.
Let me hop in here real quick.
Go ahead.
You're totally right about the trailing and the forward P and even the price to sales. Okay. It's not, price to sales is trailing, so you're 100% right. But for the forward, there's a chance that Nvidia reports a surprise, and all of a sudden, what you thought the trailing PE was actually goes much lower.
Correct. And the same thing goes for the forward, depending on the guidance, of course.
100%.
Okay, so 100%. We'll see what happens with the upcoming.
In other words, it says it's trading 30 times forward, or 38. What is that?
38. The forward.
38 times forward. It could very well be, 25, 32. Who knows?
Wow, that would be a big surprise, right?
25 would be insane.
Wow, that would be insane. 25. Say 35, 32. Okay. Okay. So if we take a look at the most recent commercial execution of Nvidia, I mean, it doesn't get any better, guys. So let me see. Financials, quarterly. Take a look at this. 69% year-over-year revenue growth. This is insane. This is absolutely insane. We're talking about the largest company of the world that as of now is showing a year-over-year revenue growth of 69%. This is absolutely historical. Never seen before. Unbelievable.
It's the greatest growth company of all time.
Yeah, correct. Take a look at the revenue growth, or at the revenue growth quarter over quarter. This is unbelievable. It's a rocket ship. It's parabolic. So it's crazy. So $44 billion was the revenue that Nvidia reported a few months ago. Take a look at the net income. $18 billion of net income.
Sheesh.
Take a look at the, in the case of the net income, we can say, okay, but the net income, went down quarter over quarter from 22 billion down to $18 billion. I think that here comes the write down that you said, Dan, because of the restriction on AI
Selling
chips
into
China. Correct. Exactly.
Yep.
So that affected the net income. It ended up affecting the EPS as well. Free cash flow, let's go see all-time highs, $26 billion of free cash flow. Unbelievable.
I mean, that's the metric that matters.
I mean, unbelievable. It's a cash cow. Unbelievable. And I always talk about this. So if we take a look at some ratios here in the case of Nvidia, so as of now we have done, as I just pointed out, we have a forward P ratio of 38. Okay, which sounds a bit pricey, a bit expensive, but take a look at this. So if we take a look at the history of Nvidia, a forward P ratio of 38 is not really that expensive. So get this, guys. Back in October of 2020, Nvidia was trading at 54 times next 12 months earnings. There was a forward P ratio of 54. But what was the net income that Nvidia was making back in October of 2020? So again, as of now, we have a forward P ratio of 38, but in October of 2020, the forward P ratio of Nvidia was 54. So this is a company that has always traded on high multiples. But take a look at this. So as of now, Nvidia is making a net income of $18 billion. Trading at 38 times, next 12 months earnings. Perfect. But if we take a look at the net income that Nvidia was making back in when did I say it was October of 2020? So let's go see that. Take a look at this. So Q4 of 2020. Way back then, Nvidia was making a net income of $951 million.
Yeah, it's crazy.
So Nvidia is trading at a lower forward P ratio relative to October of 2020, despite the fact that this company is making, as of now, a net income of how much it was? Let's see, $18 billion. Correct.
Nearly 19.
It's crazy. Yeah.
I mean, the only thing I would maybe say to contextualize that is that in late 2020, we were like in quite the frothy market. We had SPACs going crazy, IPOs were going wild. Crypto, I think, was in the midst of its first real run at 100,000 on Bitcoin. Like, it was a crazy time in the market, late 2020, 2021.
Yeah, but when you are evaluating a company from a fundamental standpoint and also from a financial standpoint, you need to take a look at the ratios from 100%. a historical standpoint, right? So,
Sure.
But really, and I am not saying go ahead and buy Nvidia at the current valuation, but some people make this mistake. So they say, okay, but Nvidia has a forward P ratio of 38, super expensive, and it has a price to sales of 27. So it has a market cap of $3.97 trillion that equals the 27, times the last 12-month revenue of the company. But they don't look at the historical valuation of this company. So this is a growth stock. The company is growing at an exponential pace as of now. And I have been, I always tell the people, the guys, the members of my Patreon, this done. So you have companies that trade with very expensive valuations, but
Call it
multiples don't matter as long as the markets don't see the top of the demand. or
Yeah.
as long as the markets don't see any potential competitor that could be,
Yes.
putting in jeopardy the business model of the company. So, I mean, yeah, you can argue that a forward P ratio of 37 in the case of Nvidia is a high multiple. It is an expensive multiple. But as long as Nvidia, or as long as the markets don't see a top for the demand of Nvidia chips,
So
I mean, these multiples can still go higher. And
this is a
and as you pointed out, sorry, let me finish this.
No, finish up.
As you pointed out, if Nvidia keeps growing its revenue, its net income, and so forth, these multiples could even go down, as you just pointed out. Yeah, I wouldn't buy Nvidia here. I would wait. I would wait for a pullback. I mean, I don't like buying stocks with a price to sales of 27 from a long term investment standpoint. But yeah, I mean that's the situation that we have in Nvidia. Go ahead, bro.
I would just say, because you mentioned it earlier, and I think it's worth mentioning, like Nvidia has made a lot of money. They're selling a lot of chips. Like, I don't think anyone reasonably expects Nvidia to continue doing 70% revenue growth year over year. Like, they're the biggest company in the world. There's only so many countries and companies that have the money to write those checks. I think the biggest thing moving forward is going to be free cash flow and gross margins. That's what's going to keep this company afloat, because making a lot of money, and don't get me wrong, Nvidia makes a lot of money in revenues. It gets to a certain point where the market is just going to care about how much of that money is being translated into profits, and that is how a growth company can make a very graceful transition into a more value-esque company, similar to think Netflix.
And take a look at this. I'm glad you brought that up, because let me see if I am sharing the right screen. Okay, so in the case of the gross margin, it came out at 60.5%, right? And that's what
people freaked out for a second.
Correct, but they upguided on gross margin. So they said that they are expecting gross margin, but to go higher again. And I think that they guided up on gross margin by 62% in the upcoming quarter. So that was a trick that the Bears didn't get about the last earnings report. And yeah, so for the most part, Nvidia is saying like, hey guys, we don't know when our demand is going to top. So yeah, we are up guiding on gross margin. And well, yeah. Anything else to say about Nvidia, Dan?
No,
we good. That's it.
I think we covered it really well. I would say, I think closing points, the actionable points. Probably neither of us would buy it here. Wait for that pullback.
There you go. Okay, let's go over Robinhood markets. That stock has been a monster.
I love the stock.
What do you love the stock? There you go. It's a very special, I would say, broker. Brokers. Yeah. So don't you think that at $95, the markets have already priced in a lot of good news here?
Yeah, I think you're right about saying that, but it's entering a new phase where, similar to how we believe that, we talked about how Nvidia is a winner in the semiconductor space. Netflix is clearly a winner in the visual streaming space. Spotify, the winner in the audio streaming space. I think you have an argument that Hood is going to be the winner in the brokerage space. And I mean, like thinking about their competitive advantages, like the first one being is that they are top of mind for all investors in the US. Retail investors, when they think of investing, they think of Robinhood. As a result,
in the US, yeah, correct.
In the US, correct.
They would still need to expand their international, operations like to more countries, right? Because as of now, they only have international. Yes. They are doing business here, Canada, and the United Kingdom, I think.
Yes, I think they're trying to make a march into the EU. And I think, if I remember correctly, that is where they are offering the special tokenized private securities of OpenAI and SpaceX.
Okay.
So I think something really interesting about Robinhood, and I think maybe part of the reason, I think the market's kind of starting to snip it out, is that they are becoming the trend setter and not the trend follower. And what I mean by that is, I don't know if you have Robinhood. I use Robinhood.
Oh yeah, I use Robinhood. Yeah. I mean, it is not my main,
correct
broker, but yeah, I have like 2 accounts in Robinhood.
I got a side pot of degenerate money in Robinhood. Yeah,
there you go. Yeah, I trade earnings on Robinhood because I trade I trade earnings reports once I come out. I know the expected move, and if I like the report, and and the stock pulls back, and I think that the algorithms are mistaken, I buy the dip and stuff. And for that, I use Robinhood because I can place market orders after hours. That's the only broker that has market orders after hours. Go ahead, bro.
Oh, I didn't know they did market orders. I thought it was just limit.
Oh yeah, after hours, yeah.
Okay.
Yeah, limit orders after hours could be a bit tricky, especially if you're trading earnings. So yeah.
Oh, without a doubt. But I mean, since we're talking about Robinhood Legends, which is their web-based active trading platform.
Okay.
Ever since that came out a couple of months ago, maybe.
Mm-hmm.
My main trading platform is Fidelity Active Trading Pro. Mm-hmm. They always had software-based, like a download, you open up an application. 3 weeks ago, they started an Active Trading Pro desktop version. They're trying to catch up.
With Robinhood?
Yeah, they're trying to catch up. No, I know it sounds crazy. But right now, Robinhood is leading the way. They got crypto native on their platform. They're making web-based active trading platforms. They're doing 24 hours a day, 5 days a week trading. Where Robinhood goes, Fidelity and Schwab are eventually going to have to follow because they are realizing that they are losing the young investor to Robinhood.
Which is growing at a very fast pace, so yeah, for sure.
Correct, and not only are they losing the new retail investor, Robinhood's not paying anything for them. Their cost of acquisition per customer, I couldn't find a statistic, but it's referenced on all their earnings calls that it's almost like they're shy about it. Maybe they're embarrassed about how little they're paying to get people to come onto the platform. But it could cost a company upwards of $50 to $80, like Fidelity or Schwab, to onboard somebody. For Robinhood, it's much less. They don't have to pay for the marketing. They don't got to make their case, and as a result, they can take all the time and all of their resources and invest it into making the platform the best platform possible. Mm-hmm. So
yeah, I mean, the platform has improved a lot, and the platform is super friendly, man. I mean, if you want to learn how to trade options, wow, the platform is like, it is fantastic. It is super friendly, and that is something that that Hood has done in a very positive way. When it comes to as you just mentioned, the tokenization of private assets. I guess that OpenAI said that they didn't burn it up with Robinhood to do it and stuff like that, but they would still do it, right? I mean, Robinhood is so,
this is what I think happened. Okay. It's not terribly uncommon. My fiance works for a private company that allows that does stock options, and once your stock is vested to you, you're allowed to do whatever you want with it. This is not a new. It is not a new. It's not a new thing, for lack of a better term, for employees with private stock to basically sell the rights to those stocks to other institutions to get liquidity immediately. I think that Robinhood probably has connections with, because they are an institution, they can be part of these private transactions. They probably bought private restricted stock from OpenAI and SpaceX employees that need liquidity right now. And the only thing that's new is them putting it into a tokenized version that can be traded in a semi-liquid way.
So they have the collateral, because that's what sounded like fishy,
No,
so they should have the collateral. They should have access to those shares, right? Okay.
Yes, they have access to those shares. They're restricted. So basically what would happen is that, if I understand it correctly, because obviously I've never done it.
Me neither. So that's what I'm asking. Yeah, I'm curious about the tokenization of shares. Okay.
Yeah, so basically what they've done is they said, all right, we're going to pay employee of SpaceX X amount per share, and when it's public, when it's free, it becomes our share.
Okay.
So if they ever IPO, Robinhood is going to have all those shares, but the idea is that they've tokenized it, and you mentioned that they need to expand beyond the US. Correct. They're only offering these to people in the EU. They are making a heavy bid. A heavy bid.
So it's not available here in the US? I didn't know that.
No, it is not. It is only for select EU customers. They're trying to they are trying to recreate the dominance, the hegemony they have in the United States in the EU.
Yeah, they will expand it eventually, I guess, to the US because, yeah.
Yes, eventually. And I mean, so this is why I think it's very well possible that Robinhood succeeds in replicating that dominance in other countries. So the tokenization of private stock is just like basically selling sex or cocaine. Like, it's really flashy, it gets attention, and that is going to be
super attractive. Yeah,
that is going to be super helpful. But what could actually cause people to put substantial money into the platform from overseas is if they tokenize US stocks. So US investors like myself enjoy direct access to our exchanges. Like, I can just go and buy Apple. I can go and buy Robinhood. I can go and buy whatever it is. I can just do it. I don't have to find an ADR. I don't have to buy an index. I don't have to buy an ETF. I can just buy the stock. Tokenization of a US stock would work. You basically be, if I understand correctly, you'd be able to put a stock of Apple into a token, and it would trade 24/5.
Correct.
And you could do it from anywhere in the world. So investors in Europe or anywhere with access to a Robinhood account would be able to buy these stocks, whatever it is, whatever US stock you want, directly. And you also, through tokenization, eliminate you basically reduce the fees and you speed up the transaction time. So it's better than TradFi, for lack of a better term. Everyone made a big deal about when we went from T+2 to T+1 a couple months ago. Tokenization would be T instantaneous.
Yeah, but I think that the most attractive aspect to it is like they are offering shares that we don't have access to. They are offering shares of OpenAI, SpaceX, I don't know, Starlink, I don't know. So that's super attractive because not everyone can buy shares in the private markets of SpaceX and stuff like that. So they are still bringing democracy to finance. They say,
democratizing finance. I guess I'll kind of close the point on tokenization with this. You said look at the chart, and I have the chart pulled up here. You're like, it's clearly pricing in a lot of good, and I'm like, I totally agree. But I think that the growth that Robinhood could be on the precipice of unleashing warrants attention. And I don't think the market's wrong. I think there are a lot of people that are putting money into this name and investing for the long term because they realize that if they crack tokenization, that they're going to be the number one platform globally. I think that it basically opens up their platform. Obviously, they have to deal with with regulatory, boundaries in the areas they want to work with. But once the technology is there, you've opened up access to a market.
Hold on, bro. Do you see Robinhood, I don't know, later on down the road being the largest stockbroker of the world?
I mean, I believe in technology. I'm a growth investor.
It could happen. Wow,
it could happen. I guess the point I'm trying to make is that the market often isn't wrong about stuff like this. And we'll know when we know.
Yeah, the technical chart reflects that the company has been doing, for the most part, everything right.
Yes, recently we were kind of joking about it in your Discord, but recently they got fined by the EU, and I'm like, or there's an investigation by the EU, and I kind of made the joke, and it's like, it's actually probably bullish. Like, if the EU is investigating you, you finally made it as a big US tech company. You know what I mean?
Yeah. You figured it out.
That's a buy signal. Don't get me wrong. I'm not saying wake up tomorrow and put in $25,000 into Robinhood. I'm just saying that if this thing pulls back, this is something you want to buy if you believe in the growth story. And
sure.
And I think the other thing, if you had to, walk through door A, buy Robinhood, walk through door B, buy Fidelity, eToro, Schwab, name your favorite broker.
Forget about eToro. eToro is garbage. They don't even have options trading, so forget it. That's garbage. Yeah.
I guess I just feel that with Hood.
I mean, it would be good for newies because they would not be gambling on on calls and puts, on daily calls and daily puts. But I mean, you're not even offering, options trading. So, I mean, you're not a competitor relative to Robinhood, right? So, of course. Do you want to go over the technical chart so I can go over the financials of the company?
Yeah, sure. But I mean, just
do you have any? Okay, no, go ahead, bro.
This is kind of the big point, because you don't even need to believe in Robinhood. If you believe that tokenization is the future, Robinhood is the only brokerage that started doing it. Everyone else needs to catch up. And I would guess that the people at Fidelity, Schwab, don't have the talent in-house. It's going to be a massive spend for them to catch up.
Wow. Okay.
Massive spend. So I can quickly go over.
Like this tokenization mania and stuff could be just, kicking off. And Robinhood is going to be the leader of the...
If you believe in tokenization, this is where you want to be. Yeah.
Okay. Do you want to go over the technical chart so I can go over the financials? Sure. Yeah.
Sorry, I know we went a little long there, but
no, it's okay. They didn't know. Yeah. Okay. So you're sharing your screen. Yeah, there you are. Where would you buy it? Because by the way, we got an unusual call option alert here that was posted in our Discord this week. I can go over it later.
Yeah, do it.
And later. And I mean, this chart looks very good. And on top of that, Bitcoin is breaking out. The hood. We can say that this is a proxy of the crypto space in the stock market. So correct. It is definitely benefiting from the huge run that we are seeing, the huge run to the upside that we're seeing in Bitcoin. So say that Bitcoin keeps going up. Do you see hood above $100?
Yeah, no problem. I drew this red line at 86 on the screen there. That is where it gapped up. If you get a big pullback, I would expect there to be a hell of a lot of support there. You might see it a little bit earlier, around 90, but assuming...
you froze.
Holding the current market conditions equal, meaning there's... Go ahead.
No, you froze just for 1 second. That's good. You're back. You're good.
Right. Okay, cool. So holding the current conditions in the market equal, meaning like there's no major change in the narrative. I've noticed that this stock really respects the 5-day exponential moving average it has on the way up. Like anytime it kind of closes below that average, which is the line in blue,
that's a daily,
it's pretty
right?
quick to retake it.
That's a daily, right?
That's daily, yes. 6 month daily.
Okay, perfect.
And if that's not good, if you don't like the fact it crosses through it, I also have the 13-day exponential moving average here, and you can see all the way on the way up, it's just barely to the cent, only once touched it. So if you're looking to kind of play it day by day, day trade, I'd be looking, and that's not something I do. But if I were to, I'd be looking at the 5-day exponential and the 13-day exponential to kind of guide my levels of support and resistance, or I guess really support in this case.
And that EMA is signaling $80, right, over there. In case of a pullback, would you be a buyer then there at 80?
So this is 90.
90. Okay, my bad. I need to wear my glasses. I guess.
No, you're all right. You're all right. Okay.
So that's
if I had to put fresh money to capital and I saw it go to 90, yeah, I mean, I would certainly consider it. But by the time in the next couple of days, the 13-day exponential moving average is going to be higher than 90.
Okay. But you would be interested in buying maybe at $90, and you see the potential of a breakout above $100, right?
Yeah, and I think of course I think what's awesome about when you're talking about breakouts to all-time highs, there is no one with a share of Robinhood at $102. Mm-hmm. There's no one that regrets buying it above 100 to sell the share. Mm-hmm. There's just buyers. Like that's why you can have such explosive breakouts.
And that's why uptrends, for the most part, attract buyers and not sellers.
Yeah.
Yes.
Yeah.
And needless to say, when a stock is trading at all-time highs. So this is a discussion that I always have with the members of our Patreon, of both patrons in English and Spanish. When a stock is trading at all-time highs, it can keep going higher. You set the price. So how higher can Hood go above $100? 110, 120? I don't know.
Who knows?
Who knows?
Honestly,
of course.
I'll give the traders in the audience this. If this breaks above 100, I would just buy it, and I would use a close below that 5-day exponential moving average as my stop.
There you go. Awesome.
That's what I would do.
Hey, bro, I'm curious because I have not taken a look at Hood's valuation in a long time. So I think that I made a video 83. No, but I didn't go. I don't think that I went over the financials. So let me pull that up here quickly. Let me see.
I will stop sharing this.
Okay.
Dude.
Yeah, I think that I have the screen.
You know,
now.
man, I haven't looked at the. I have not looked at the valuation in a while either, but kind of to your point before, the valuation doesn't matter if the market believes that the growth is going to be there, the competition doesn't exist.
When a story is sexy, valuations, valuations don't matter at all.
Yo, what is sexier than tokenization of private companies like OpenAI and SpaceX?
Yeah, that's pretty sexy.
Nothing.
I gotta give you
Nothing.
that. It's super sexy. Okay, so we have a market cap of $83 billion. We have a P ratio of 54. So Hood, trades at 54 times.
That's crazy.
Trailing 12 months earnings. It's an expensive P ratio. A forward P ratio of 67. So this company trades at 67 times next 12 months earnings, and we have a price to sales of 26. So a market cap of $83.4 billion. That equals 26 times Robinhood's last 12 months revenue. So this is not a cheap valuation by any stretch of the imagination. But let me take a look at the financials of Hood before we go over Palantir real quick. So we have a 50% year-over-year revenue growth, bro. This is exponential growth. Take a look at the. We had a little decrease of the revenue. Quarter over quarter from $1 billion down to $927 million. But yet still, this is a 50% year over year revenue growth. Great. We have a net income of $336 million. And we have a net income growth year over year of 114%. So the company is growing at a very fast pace. Let me take a look, because something that always, caught my eye about Hood was its cash position relative to its long-term debt, because this company has always had a very healthy financial situation. And take a look. So we have a cash position of $4.4 billion and no debt at all. This company is sitting on a cash position without any debt whatsoever of $4.4 billion. Free cash flow, $640 million. The company is not diluting, and they shouldn't, because they have a very healthy financial situation with a lot of cash and no debt. Capital expenditures are pretty much, under control, so no crazy expenses over here. What else? Let me see. So,
can you pull up the gross margins on this?
Yeah, sure. The gross margin. Let me see. I am sharing my screen, right? Yeah.
Yes.
Or not?
Yes.
Okay. You can see what I'm seeing, right? Yeah, okay, perfect.
Yep. Mm-hmm.
So the gross margin. Come on. Profit margin. Where is it at? I should have it here. No, I don't have it here, I think. I don't know why it's not reflected, but take a look at this. So we have revenue, customer provided. No, I don't have the gross margin, weird. But I have the profit margin, I think, which is the total profit that the company is making. 36% profit margin, man.
I mean, but even better, look right below that. Free cash flow margin, 69%.
69%, yeah.
Insane.
Yeah, but a profit margin of 36% is, this is very good. So the company is making a profit of 36%, a total profit of 36% out of all the revenue that it is making. The company is killing it. Let's just put it that way. So we have 23 analysts covering the stock. The most enthusiastics about Robinhood think that this could be a $110 stock in 12 months, $75 the neutral analysts, and the bears see Robinhood at $32. Good luck with that.
Yeah.
If the company keeps growing like this, okay. Yeah. When it comes to the revenue growth for the upcoming years, 15% 2026, 11% 2027, and 2029, 9%. This company has a price to sales of 26. So this leaves a very high bar when it comes to the upcoming earnings reports. Yeah, because you cannot justify a price to sales of 26 if your guidance on revenue is going to be at 15% for 2026 or 11% for 2027. So the bar is high unless we see a big crash on Robinhood before the next earnings report comes out. And the company, this is a growth stock. And multiples will not matter as long as Robinhood can, keep showing the markets that they have a very big growth ahead of themselves, right? So the bar is high, the valuation is high, and the next earnings report is going to be interesting. They need to up guide, bro, for sure.
Without a doubt.
A 15% year-over-year growth on revenue will not be enough to justify this valuation, but the company is doing a lot of things right. The chart looks bullish. And unless something unexpected happens in the markets, I think that if we happen to see a good drop on Robinhood, the dip is very likely to end up being bought up. Okay, now, last but not least, Palantir. So, it went down today a bit, and I think that Dan Ives upgraded the stock today with a price target of $160. So you don't see the story behind Palantir slowing down anytime soon, right?
No, I mean, we don't need to spend a lot of time on it because, I think a lot of people understand the position Palantir's in. But I mean, they basically make their money through their AI offerings through their. Yeah.
By the way, Dan Ives told me that day that we were hanging out with him at the New York Stock Exchange that he firmly believes that this is the next Microsoft.
Yeah. So, no, I see what he's saying. So I don't know if it's a stated goal, but it's definitely the vibe I get from listening to their earnings calls, which kind of sound a lot like podcasts at times. They want to be the operating system of the U.S. military. So
that's a big deal right there.
It's a huge deal. Their two main divisions are Gotham and Foundry. Foundry is for commercial clients, think like people in healthcare, manufacturing, finance. Gotham is for the U.S. government, intelligence agencies. And the way they make a lot of their big money is, they take a look at all the data you have and they organize it in a way that AI can manipulate in a way that creates value. And there's just so much data to go around, and they've made themselves the go-to partner. It's if you as Palantir have succeeded in getting the security clearances and gaining the trust of these sovereign nations, they're really unlikely to go to someone else. And you mentioned earlier, does Nvidia have any competitors? Mm-hmm. You could make an argument. I don't know if there's an argument that Palantir has a competitor. Wow. So I would agree with Ives. The next Microsoft, except for the U.S. government as opposed to the enterprise. But if they have their way, maybe the enterprise as well.
Gotcha. So no competitors in sight. It is a super growth company. And that implies that, we have a very, very super extreme expensive valuation. So we will have, corrections, occurring here and there. And as long as the markets don't see a top for the demand of Palantir's services, the dips will end up being bought up more likely than not. And Mr. Curb is a character, right? So he's managing super well, the retail investors and stuff like that. So that's crazy. Let me go over the technical chart.
Do it.
Of Palantir. Let me take care of that one. Let me see. I have it here. So, and we got an unusual call option alert as well. So Palantir went down today 0.44%, closed the trading session at $142.50. It is a very good looking chart above all the moving averages, above the 200, 150, 20, 5-day moving average. So as long as the bulls can consolidate above this upward sloping, this rising 5 DMA at $140, I mean, I wouldn't be surprised, and I know that, the markets are trading at all-time highs. We're due for a pullback and stuff like that. We are, quote-unquote, due for a pullback. We are having a pullback. I would say that sooner rather than later. We cannot time it, and we don't need to time it because that's what we have the technical chart for. But if the markets keep melting up, which could be the case, for the upcoming week or I don't know, tomorrow or next week or something like that. July is actually a very bullish month usually for the markets. I can see Palantir getting up to all-time highs at $148 as long as the bulls can defend this upward sloping 5DMA at 139. If 139 breaks, keep an eye on 137. I think that 137, let me see, 137 is a previous level of support for Palantir back from mid-June. 137 breaks. I mean, I might even be a buyer from a trading standpoint, obviously, at 130. This is a level that is coinciding with an upward sloping 50-day moving average. So very good looking chart. It looks like we have higher prices coming up. By the way, let me take a look quickly at the market structure of the Messi of artificial intelligence. This is a tool that I usually use. Let me see. Do we have?
You just call it the Tesla of artificial? Is that what you said?
Yeah. So no, I don't have. Right. Do I have? No, I don't have the website available here. So that's okay. Very good looking chart. If we take a look at the valuation of Palantir, this is a tough one, right? Yeah. So yeah, this company is larger right now than Coca-Cola, bro. It's crazy. It's hard to wrap your head around this. So $333 billion. It has a market cap of $333 billion. Are you guys seeing that?
Yeah, you got it up.
Awesome, mm-hmm. Perfect. Yep. It has a trailing P ratio of 622. So this company trades at 622 times trailing 12 months earnings, which is a very, frothy valuation. It trades at 256 times next 12 month earnings. I mean, expensive. And it priced itself of unbelievable 114. It's crazy. So, in other words, with a price to sell of 114, anyone that is buying Palantir at $142 is paying this company $114 per every dollar of revenue that Palantir is making. It is an excessive valuation. So what happens?
No.
Yeah, that's what it is. Yeah, it is. It is such a great deal. But do you know what the Knives pointed out? Go
on.
Yeah, on the New York Stock Exchange, at the New York Stock Exchange. So the valuation is expensive. So we're going to have corrections along the way. So take advantage. If you like the company, if you believe that Palantir is the future and there are no competitors and stuff like that. So just take advantage of the corrections and buy the dip. That's it. Yeah, I think, again, that when a study is sexy, and the markets don't see that story slowing down, multiples don't matter. So it sounds crazy, I know, but this valuation could keep going up.
No, I don't think that's crazy to say, man. Like if you were waiting for valuation to get you into these companies, you would have missed Amazon, you would have missed Google, you would have missed Meta, you would have missed Nvidia, you would have missed Tesla.
It's a tough one, yeah.
When you're talking about growth companies, valuation is not the best metric to be using to get in.
Yeah, and the guys have to keep in mind that these kind of higher multiple stocks are the ones that get hit the hottest when we have a market correction. So if we get bad news, if the markets freak out for this or for that or for whatever reason, these stocks usually go way lower relative to the S&P 500 and relative to the Nasdaq 100 and stuff like that. But take a look at this, and this is something super impressive that I don't know if there is any other stock that can exhibit this. Take a look at this, Dan. So we have 1, 2, 3, 4, 5, 6, 7, 8 consecutive quarters with year-over-year revenue growth. This is impressive.
Yeah, I mean, it's like no seasonality.
Bro, not even Nvidia can exhibit, this.
I did not know that.
This behavior.
That's crazy.
8 consecutive quarters with year-over-year revenue growth. This is insane. So as long as Palantir can keep showing this kind of growth, forget about the multiples, guys. I'm sorry. Forget about the multiples. Take a look at the revenue in numbers. Take a look. Impressive. This is a growth machine. It is a growth machine. Oh, by the way, something that I have always complained about in the case of Palantir, and I don't know if you know this, but I have been pointing out this aspect, for the last 2 years, is this. Take a look. So this company has a cash position of $5.4 billion. But take a look at the short-term investments, $4.4 billion. So this money is invested in short-term treasury bonds.
That would be the assumption. Yeah.
Correct. So what happens? So most of the income or most of the net income that Palantir is making as of now, we're looking at $214 million of net income, comes from investments of the company and not from the business model of Palantir.
That's interesting. I didn't know that.
Yeah, you should know that. So take a look. Again, let's go to the balance sheet. You guys can see $5.4 billion in cash. This company has no debt. Last time I checked, look, no debt. No debt.
That's nice.
So
okay.
This is great. But if the Fed starts to cut rates, the net income that Palantir is making out of these short-term investments that are, for the most part, short-term treasury bonds, is going to go down. So Palantir needs to compensate this income that will eventually go away. I mean, if we get lower rates, maybe I don't know, maybe inflation goes up and the Fed hikes rates instead of cutting, and maybe Palantir is going to start making even more money out of the treasury bonds that they are investing in, right? But
what a bull case.
I mean, that I mean, you never know, right? I mean, why not? You never know. So
yeah, sure.
So I think that 60% out of the net income of Palantir comes from investments in short-term treasury bonds. So this is something that the company has to improve because, I mean, get this, guys. We're talking about a company that has a forward P ratio of 256. It trades at 256 times next 12 months earnings. So this is a very expensive valuation. So this is a task that Palantir has to Palantir has to work on this. I would say that sooner rather than later. But other than that, I mean, the execution of the company from a growth standpoint is impressive. So how much did I say? So $5.4 billion in cash, no long-term debt. So, and let me take a look here at the free cash flow of Palantir before we wrap it up.
Because, yeah, that's what I was about to say. We should probably look at that as well.
Yeah. So take a look. Yeah, so free cash flow went down quarter over quarter from 457 million down to 304 million. But again, guys, the company is diluting like a champ. Take a look. The outstanding,
we should. Yeah, go ahead. Sorry.
Yeah, the outstanding shares, are going up a lot exponentially. Expenses are under control. So for the most part, so far so good. And the markets will not, pay much attention to the multiples as long as this company keeps growing the way that it is doing it, right? So there you go. And take a look at the revenue growth that is expected for the upcoming years, bro.
Only 200%?
No, take a look. 28%, 32%. Take a look. For 20,
right. Sorry.
For
I looked at EPS.
Yeah, for 2028, the revenue growth is expected to accelerate year over year up to 42%.
That's and I would imagine I would imagine that fiscal year 26 is probably impacted by just analysts writing tariffs. I don't think that'll be the truth, but
this is insane. The growth that is expected for Palantir in the upcoming years is insane. So it is. I mean, in other words, it is a very. It trades with a very expensive valuation. We'll see corrections along the way. But if the growth that the company is showing as of now doesn't stop, or if the markets do not visualize a top in the demand for the services of Palantir, I mean, the story is sexy, and it might remain sexy for the foreseeable future. Okay, done. So thank you very much. It's been a long podcast. I guess that the upcoming podcast, because we want to do this on a weekly basis, we'll try to do it on a weekly basis. And the upcoming podcasts are going to be probably shorter, but you guys cannot complain. So we went over. We just carried out a very in-depth analysis of Ionq, Nvidia, Robinhood, Palantir. So, bro, my pleasure. Thank you very much, and
thank you so much, Alvaro, for sharing this platform with me. I really did enjoy having this conversation with you.
It was fun.
I hope everyone that's listening, watching, got something out of it too. As for myself, if you want to talk to me, you can check out my blog, GorillaWithGlasses.com. You can contact me there. But I'm also hanging in Alvaro's Discord.
Correct. The link is in the description box of this video. And if you want to join our Patreon and Discord, the link is also in the description box. So thank you guys. And I will see you in our next podcast. Thanks, buddy. Take care.
Charts and checks, baby.